Hey, everyone. Welcome to the third episode of Investing Kev. My name is Kevin, and I'm very excited because today is the first ever stock analysis on this YouTube channel, and we are going to break down JD.com. So, I currently own JD. It is currently in the balanced portfolio. If you're new to the channel, I have four different investing portfolios that we will be tracking over a long period of time. We have the S&P 500 portfolio, which tracks the S&P 500 index. We have growth portfolio, which includes a lot of high growth stocks. We have the dividends portfolio, which is comprised of dividend paying stocks that not only consistently pay their dividends, but they increase their dividends yearly. And we have the balanced portfolio, which is a mixture of dividend stocks and growth stocks. The brokerage that I'm currently using is M1 Finance. So the one thing I like about M1 Finance is you can purchase fractional shares. So currently we have less than one share of JD. We are currently at 0.64887 of one full share. And I also have a Google Spreadsheet link in the description below. This spreadsheet contains all four portfolios. You can see all the shares, the cost basis, the market value, and the donut graphs of the portfolio weighting. And over time, as we accumulate dividends, we can see the earned dividends per month. And also, there are watch lists for dividend stocks where you can see a wide variety of different dividend stocks from all different industries. The goal of this watch list is to offer a list of different companies in different sectors that you may find interest in and to kind of spark that interest to do more research to understand what these companies are about. And the same thing goes for the growth watch list. There are a bunch of stocks out there. A lot of them I don't know what they are, but these are very common stocks that I've seen in articles or in investing community discussions. Again, I hope this sparks your curiosity to see what stocks are out there, if there's an industry that you're targeting, or if there's a specific company that just calls to you that you want to be a shareholder in. Also, before we get started, please consider subscribing to this channel. And if you like this video, please give a thumbs up. I'm really hoping this channel takes off, that I can reach a huge audience out there, teach whatever I know, and pass it on to you guys. I will be coming out with more stock analysis videos, more portfolio updates, and just in general financial thoughts and opinions. So, with all that being said, let's get started with a breakdown of JD. All right, I am on JD.com's website, specifically their investor relations page. Whenever I research a company, I like to get to the source of truth. So, I will Google JD.com about page or their investor relations page. And that holds true for pretty much any company out there. So, what is JD.com? JD is China's largest online retailer and its biggest overall retailer, as well as the country's biggest internet company by revenue. JD sets the standard for online shopping through its commitment to quality, authenticity, and its vast product offering covering everything from fresh food and apparel to electronics and cosmetics. Its unrivaled nationwide fulfillment network covers 99% of China's population and provides standard same and next day delivery, a level of service and speed that is unmatched globally. Reading this introduction about JD.com, I'm very impressed with this company because currently 1.4 billion people live in China. For JD to have a logistics network that can serve 99% of the population is huge. They're not only focusing on tier 1 cities such as Beijing, Guangzhou, Shanghai, and Shenzhen, but they're also focusing on rural parts of China, whether it's in the west or in the north. This company to me shows that they are really committed to customer service, where they are telling customers, hey, no matter where you are, we will get your package to you within the same day or the next day. And that to me really builds customer loyalty, where they will continue to shop with JD. And the numbers definitely show it right now. If you look at the top right, it's currently 500 million annual active customers, and they have over 1,000 warehouses. Taking a look past the JD e-commerce portion, when we focus on JD Logistics, they have one of the largest fulfillment infrastructures of any e-commerce company in the world. They currently, as of March 31st, 2021, they operated 32 Asia number one logistic parks, which are among the largest and most automated smart fulfillment centers in Asia. And they're leveraging 1,000 warehouses with a total of over 21 million square meters. JD has the ability to achieve rates of approximately 90% of orders delivered the same or next day at a rate of fulfillment that no other e-commerce company of JD.com scale can match globally. And they are focused on developing the smartest, most efficient logistics system possible, leveraging big data resources, information systems, and experience in the China market. They believe that technology innovation can drive smart logistics. And JD built the world's first fully automated warehouse in Shanghai and are currently developing their own drones delivery and automatic delivery robots. When you invest in JD, you're not just investing in a massive e-commerce company, you're investing it in a company that has a logistics network that is currently not matched anywhere globally in the world. You're investing in a technology company where they're utilizing machine learning, big data, and AI to help increase the efficiency of their systems, whether it's autonomous delivery, robotics, or drones, to help provide that customer service where they stand out above Alibaba and Pinduoduo. You're also investing in a company that is committed to quality and authenticity. JD has a sophisticated supervision system, including strict criteria for merchant approval, stringent control of supply channels, random sampling inspection, independent research, strict penalty system, and a guaranteed return policy. I want to take a look at JD's 2020 financial and operational highlights. This came out in March 2021. Looking at their financial highlights, you can see from 2015 to 2020, their net revenues increased every single year. And within 2020, they had 745.8 billion RMB, which is a 33% compound annual growth rate from 2015 to 2020. When we break down the 745.8 billion RMB, we can see that 652 billion is tied to net product revenues and 94 billion is tied to net service revenues. And if we want to dive even further, when we look at the net product revenues breakdown, you can see that general merchandise revenues continues to grow every single year, and electronics and home appliance revenues continues to grow every single year. And that is really awesome to see from JD. And when we break down the net service revenues breakdown, you can see that marketplace and advertising services continues to go up every single year. And then the logistics and other services continues to go up every single year. And the logistics and other services, it is a pretty massive jump from where it was 2015 to where it is currently in 2020. Looking at JD's gross profit margins, you can see from 2015 to 2020, it's gone up every single year, except from 2019 to 2020, it's kind of been stagnant. And that's not surprising to me at all. They've noted that investment in logistics infrastructure, especially in lower tier regions, is a high priority for them. And it makes sense because if they build up their infrastructure now, they'll be set in the future and where they can be more efficient and continue to serve a greater population. So they're just paying it up front now so they can pay dividends down the road. In looking at their robust cash flow generation, you can see from 2015 to 2020, they've had quite a lot of free cash flow, except for 2018, which again is tied to when they heavily invested into their infrastructure network. And so currently, free cash flow might not be as much as investors want, but I believe what they're doing right now, they're focusing on the present, getting their network set up so it can pay dividends in the future. And so you have to pay something now so you can reap the benefits and the rewards down the road. And I believe that is what JD is doing. I want to show you guys this logistics network from JD. They currently have 7 fulfillment centers in China. They have over 900 plus warehouses. When we looked at the investor relations warehouses number, it was 1,000 plus. So they've already developed more warehouses between the time that they recorded this and their most recent investor relations. They have 21 million square meters in terms of distribution and fulfillment centers. They have 190,000 plus people working in delivery personnel. And they have 32 number one smart mega warehouses in 22 cities. And they cover almost all counties and districts in China. So I want to take a quick look at their 2017 statistics. Back then, they only had 486 warehouses compared to now, 4 years later, where they have 1,000 plus. They've not only doubled that, but they've also doubled the square meters in terms of the distribution and warehouses that they have. In 2021 or in 2020, they had 32 mega warehouses in 22 cities. Back in 2017, they only had 13 in 9 cities. So you can see the massive growth between just the end of 2017 to where they are currently in 2021, the massive growth in terms of warehouses, the amount of space that they've taken up, the mega warehouses, and the delivered personnel to just serve all of China. There are many reasons why I am bullish on JD and the future prospects of it. Looking at the CNBC article from 2019, McKinsey analysis indicates that the Chinese middle class could reach 550 million in 3 years, more than 1.5 times the entire US population today. That is a mind blowing stat, in that as the middle class rises, GDP per capita will rise with it, and they should have more disposable income to spend on things related to retail and appliances and apparel. And JD is at the forefront alongside its other competitors to saturate this market. JD, alongside Alibaba and Pinduoduo, they are the top three largest e-commerce companies in China. And in 2020, all three of them commanded about 83.6% of the retail e-commerce market share, compared to 2019, where they had 80.3%. So they are continuing to grow. And I really actually like the competition that JD has from Alibaba and Pinduoduo, because it's really going to push management to not be content, to continue to invest in the logistics network, to provide the best customer service, to have that brand loyalty where customers will choose JD over Alibaba and Pinduoduo to get their grocery needs, their electronic needs, their clothing needs. And looking at this graph, in 2024, they're projecting that $6.1 trillion of the total retail sales will be in China. And for the first time in over a century, the US will cede its position as the largest retail market in the world, as China's retail market reaches 5.1 trillion this year, compared with the US 4.9 trillion. This was from 2019, but Alibaba had 56% of the retail e-commerce market share, and JD had about 16.7%. So hopefully with 2020 results, that JD will continue to push higher towards the 20% market share and chip into Alibaba as they continue to resonate with lower tier cities and continue to build up their logistics network. Looking at this article from eMarketer, they're forecasting that 52.1% of China's retail sales will come from e-commerce in 2021, which is up from 44.8% a year prior. That means for the first time anywhere, a majority of retail sales for an entire country will transact online. And now I want to take a look at JD's 2021 Q1 results. This is their earnings call transcript from Seeking Alpha, which you can look up when you look at JD's ticker. This is from May 19, 2021. This is what the Chief Executive Officer of JD Retail had to say. Coupled with robust operating performance, we are also inspired by the growth of our high-quality active users. By April 1st, the number of our annual active users reached the 500 million mark. By the end of Q1, annual active users grew by 29% year on year. In the past 12 months, we gained 112 million new active users, with over 80% coming from lower tier markets. 80% of 112 million new active users is roughly around 90 million new users from lower tier markets. That continues to show that JD is really committed to the consumers first. Whether you're in the urban parts or the rural parts, JD's logistics network will reach out to you, and that is backed up by their 1,000 plus warehouses. Chief Executive Officer also had to say, meanwhile, our unique consumer mindshare for quality products and superior shopping experience resonates strongly with our customers as we see higher engagement from them. In the first quarter, we have seen all-around improvement in terms of existing and new users' retention rates, shopping frequency, purchases on a wider range of product categories, as well as average spending per user. This shows that both the number of users and their lifetime value on JD's platform are expanding. We still have so much room to grow. They also went on to say that JD Retail is collaborating with suppliers and partners to build an adaptive model that can efficiently serve various types of consumer demands in any scenarios, anywhere, and anytime. For instance, we are actively collaborating with leading traffic ecosystems such as Douyin, Kuaishou, and more in diversified online consumption scenario, and provides our business partners with our strong supply chain, middle platform capacities, omnichannel marketing, and across-the-board users asset management solution. In this process, we've achieved the unification of products and people in the increasingly diversified retail industry, propelling further optimization of cost efficiency and user experience. JD Retail's vision is to sell goods from all over the world and to sell all kinds of goods to the world. I also want to share a quick clip This is from Bloomberg about a week ago, discussing JD.com as they beat their sales estimates.
JD.com is, where do you invest the most? Because companies like Alibaba, while still under regulatory threat, they have, in their most recent quarter, pledged to plow all incremental profits into developing new businesses. And JD.com, which is a chief rival in e-commerce, has to keep pace with their bigger, peer, if you will, or competitor, Alibaba. So you could see, according to Bloomberg Intelligence, operating margins being squeezed a bit as they spend more to compete with Alibaba and Pinduoduo in food-related businesses, including grocery shopping and the like. But right now, revenue growth seems to be good, right in lockstep with the economic recovery. In fact, it's projected that in China, retail sales, half of retail sales this year will be through online shopping, and that benefits, obviously, a company like JD.com as well as Alibaba.
When I look at the future of JD, there's always going to be challenges out there, whether it's government regulations, which holds true for any company in any industry. Chinese stocks definitely have volatility here in America as well, and there's also an increase in competition. You have the e-commerce giant Alibaba and Pinduoduo, which is rising in the e-commerce space in China. JD's management will need to continue to innovate and continue to invest, or else over time, they can definitely lose active users to other e-commerce companies, and their business may not resonate with customers over time. Right now, from what I see, JD is in a position to be really successful in the future. Not only are they successful now, their management is willing and knows what it takes to thrive in this cutthroat industry. They definitely accept the challenges presented by Alibaba, Pinduoduo, and other smaller e-commerce companies. They have a strong logistics network coupled with a strong technology backing, all wrapped inside an e-commerce company. The sum of its parts makes this company diversified and a solid investment for the next 5 to 10 years. And this company will continue to push the envelope and likely will set the trend for other companies someday to utilize drone delivery or autonomous vehicle delivery. And looking at the overall trends in China, the middle class is predicted to hit 550 million people, with their GDP per capita rising yearly, and disposable income will follow suit. Total retail sales will hit 6.1 trillion in 2024, and for the first time ever, 50% of people in China will purchase something via e-commerce than actually go to the stores. So there's no doubt that Chinese consumers will dictate whether those companies will succeed or fail. And right now, JD, with them targeting lower tier cities and resonating with a lot of these citizens in these lower tier cities, offering authentic products delivered within the same day or next day, is one of the main reasons why I'm really strong and bullish in my conviction in investing in JD. If you like this video, please give it a thumbs up, or as the youngins say these days, please smash the like button. Also, please subscribe to this channel. I will be coming out with more analysis over time. And also check out the Google Spreadsheet link in the description below. You have access to take a look at the strategies portfolios alongside the watch list of dividends and growth stocks. So that's it for this video. Until next time, stay safe.